Wall Street has hit new highs on Thursday, but the averages are struggling to hold on to those gains. We got the ECB rate decision, and we did get a bit of a surprise from across the Atlantic. We also saw euro-dollar fall from 108 to the 106 level. Joining me now is Alan Valdes of Silver Bear Capital. Alan, thanks for joining me today.
Oh, thanks for having me as always.
Well, we got that ECB rate decision today, and of course the central bank left rates unchanged, but we got a little bit of an adjustment to the stimulus program. Were you surprised?
Yeah, we were surprised. But, in the long run, okay, they cut back 20 billion euros, but they extended it for 9 months, and they left the door open to increase the size of that should events change, like what happened in Italy over the weekend and ramifications if that happens in France in the spring. So they left the window open to raise it if necessary.
And Alan, of course, next week brings the Federal Reserve meeting, so we know Fed Day will bring a lot of interesting action. But for the most part, the rate hike is priced in if you look at Fed Fund futures. So the big question is what we will be getting in 2017. So can you tell us a little bit about your expectations for next year?
You're 100% right. It's already baked in that we're going to get, quarter of a point. Although there is a whisper number going around that it might be a half a point, but I see it as a quarter of a point. I think next year, because inflation will definitely pick up, the market keeps like this. There's no question about it. So you could see 2 other rate increases next year, which would be fine. The market doesn't mind if we raise rates as things get better. That shows growth. So, we've been sub 3% for 8 years. So if we start seeing some growth, that's good for the market.
And speaking of the market, Alan, we continue to see all-time highs for the Dow, NASDAQ, S&P 500. And of course, some investors are paying attention to the Russell 2000 as well. So is there any caution that should be priced in right now?
Sure, and I tell you, because I'll show my age. I was here in the 80s when we broke 1,000 in the Dow, okay? So there's always that chance when you get to metrics like 5,000, 10,000, 15,000, that traders start to sell, only because they take money off the table. We're up 1,200 points since the election. The value of global markets is up over $2 trillion since the election. So there's a lot of money that you might see being taken off the table. And this year, it comes at the end of the year when there's a lot of what they call tax rolls, as portfolios have to adjust for gains and losses. So you could see a lot of fluctuations, a lot of movement in the next 2 weeks before the end of the year.
And speaking of the end of the year, once we head into 2017, we have a new administration. Now, a lot of people have been pricing in expectations for the administration of President-elect Donald Trump. But for the most part, we don't know quite yet what will happen in terms of policies and the legality of some of the legislations. So could you tell us what we should be pricing in?
You're 100% right. Right now, there's a lot of good talk. We're still on a honeymoon with Donald Trump. But, just in regulations alone, a lot of them, they were signed in with a pen, but it could take months or years to unwind some of these regulations. Tax cuts, again, has to go through the House. That could take a while. So there could be an adjustment period here where you could definitely see the market sell off. I think we're going to see a turbulent market next year. But in the long run, I think it's great for the market. I think you'll see the market definitely rise. If you use the same metrics we used in the Reagan era, when Reagan got in office, it took 18 months for things to settle down. But the market went up 225 points in 5 years, 225% rather, in 5 years. If Trump can get anywhere near that, in 5 years, the Dow could be at 40,000. So it could be a great run.